We're going to take a look at this thing called the Closed Private Investment Network. It's also known as CPIN.
Yeah, and we've gone and we've gotten information straight from CPIN to break it down. At its core, it is an exclusive invitation-only investment community. It was developed by Temple Rose Holding Company, Incorporated. And you know what's really interesting about it? It really emphasizes something that they call cooperative group economics.
Okay, so cooperative group economics. Let's jump right into that. So this isn't just about individuals investing in isolation. There's this collaborative element to it.
Yeah, you hit the nail on the head there.
Yeah.
The foundation of CPIN really centers around that idea that you've got these like-minded individuals and they're coming together. They have this shared vision for, building a future where self-sufficiency financially isn't just for a select few. Right?
Right.
It's accessible to everyone, and they're doing this through a mechanism of profit sharing within these investment clubs.
Interesting. So investment clubs, we've all heard of those, but CPIN seems to have a unique spin on it. For one, it's exclusive, right? You can't just join. You need an invitation based on an existing relationship. Why this velvet rope approach?
Well, it's really interesting when you look at the purpose behind this exclusivity. It's not about arbitrarily keeping people out.
Right.
They want to foster a high level of trust and familiarity within the network.
Got it.
Think about if you're going to pool resources with others.
Yeah.
Especially for, potentially significant investments.
Yeah.
That pre-existing connection that could be really valuable.
Yeah, for sure.
It's about building a community of individuals who are truly aligned in their goals and values.
Makes sense.
And that trust, it's seen as key to accessing these exclusive investment opportunities that they focus on.
So it's about fostering that kind of your fellow investor environment.
Right.
Now, the structure of this involves something called a parent investment club, or PIC, and then these series investment clubs, also called SICs. It sounds a bit like these layers. Can you kind of break that down?
Yeah, it definitely has that layered structure to it. The foundation is a Wyoming Series LLC framework.
Okay.
The BNIC Network LLC. This acts as the parent investment club, which is the PIC.
Right.
So the PIC is essentially that umbrella organization.
Got it.
And its main function is to create what they call these series investment clubs, or SICs.
Right.
So within each SIC, you have up to 9 CPIN members coming together, and they're pooling their capital.
So the PIC sets up these smaller investment groups, and that's where the actual pooling of the money happens.
Exactly. You can think of it as these smaller, more focused investment teams.
Yeah.
And they're operating under the guidance of that parent club.
Got it.
And what's important here is that CPIN operates within those existing SEC regulations that govern investment clubs. Additionally, the PIC, it also functions as the general partner, or GP, for special purpose vehicles, which are known as SPVs.
Okay.
And we'll get a little bit deeper into those later, but think of those as kind of like tools for specific investments.
Okay, so these SICs, that's where the magic happens in terms of pooling the funds. Now, the big draw seems to be access to what they're calling curated investment opportunities, or IOs. What kind of deals are we talking about here that people might not normally be able to get access to?
Well, this is where that concept of really democratizing investments comes in. The information suggests that CPIN members, they get access to what are described as angel-like investments.
Okay.
These are deals, early-stage companies, innovative projects.
Right.
These are typically, the playground of those accredited angel investors.
Yeah.
Venture capital firms, large institutional investors.
Right.
Basically, the more wealthier, more established players in the investment world.
So the average person, even with some capital to invest, wouldn't typically get a look at these types of opportunities.
That's right. But CPIN, they're aiming to bridge that gap.
Okay.
Through their network members, they can potentially invest in these IOs. Sometimes it's directly Haber, but more often it's by pooling their resources through those special purpose vehicles, or SPVs.
Right.
And what's interesting is that the source material actually emphasizes that individuals can start investing with as little as $100 within those pools.
Wow.
So it really is opening up that access.
Yeah, that's a significantly lower barrier than what we typically hear about in those private placements. Let's break down these SPVs a little bit more. What exactly is their role in facilitating these investments?
Okay, so an SPV, you can think about that as like a temporary, distinct legal entity.
Okay.
It's created for one specific investment opportunity.
Yep.
For instance, let's say there's a secured bond offering or a real estate development project that the CPIN community wants to invest in. An SPV would be formed just for that deal.
Got it.
And Within that SPV, you have the PIC acting as the general partner, and they take on the management of the operations. They make sure that everything's complying with the regulations for that specific investment.
Right.
The CPIN members who decide to invest in that opportunity through the SPV, they become the limited partners or the LPs.
Got it.
And their liability is typically limited to the amount that they've invested.
So the SDV, it acts as this vehicle to channel those pooled funds into that specific investment with the PIC doing all that, hard work of managing it and keeping everything compliant.
That's right.
The source material also mentions a preferred return on investment and how the profits are shared. So how does that work? How does that benefit the individual investors?
Well, this is a key aspect that's really aligned with that cooperative economics idea.
Okay.
So for each SPV, the limited partners, those are the CPIN members who've invested.
Right.
They're entitled to a preferred ROI. You
Yeah.
can think of this as like their baseline return. It's a minimum percentage that they're guaranteed to receive on the capital that they invested before the general partner, which is the PIC,
Right.
before they start to receive a larger share of any remaining profits.
So it's kind of like a safety net for those everyday investors, right? They're
Yeah.
guaranteed to see some return on their investment.
Absolutely. It prioritizes the return for those contributing investors first.
Makes sense.
And then the way that the gross profits for the LPs are allocated, it's quite interesting, and it really speaks to their philosophy.
Okay.
So it outlines this specific breakdown. 1% goes to covering those administrative costs of running the overall CPI network. Then they take a significant portion, 10%,
Wow.
and they designate that for donation to a 501c nonprofit organization that's chosen by the investor.
Okay.
So there's this direct community benefit component built in.
That's great.
Then another 9% goes to the referral network, which is incentivizing that community growth. And we'll talk about that a little bit more later.
Yeah.
And then the remaining 80% of the LP's gross profit becomes their net profit.
That's a very interesting distribution model, I have to say, especially that charitable giving component that's baked in. Now, this idea of cooperative group economics and the residual referral program, they seem really intertwined with this community-focused approach. Can you elaborate on how those two things work together?
Yeah, so the underlying principle of cooperative group economics here is that you're sharing that financial success of the network.
Right.
But it's not just about the investment returns. They're also contributing to the broader community
Right.
through those nonprofit donations. It's a model where collective success really have that broader impact.
I like it.
The residual referral program, it acts as a mechanism to actually foster this growth. So members are incentivized to invite others into the network.
Okay.
And that's because they receive a share of the gross profits that are generated by their referrals investments. And it's that 9% that we were talking about.
Right.
And the aim here is to create this self-sustaining, community-driven financial ecosystem where the growth of the network, it benefits the individual members and the causes that they care about.
So it's not just about, individual gain. It's about building a network where everyone has the potential to benefit and where a portion of that success is, steered towards doing good.
Absolutely.
Now, what about individuals who are, maybe new to investing at this level? The information mentions some educational components.
Yeah, that's crucial to empowering the members. For individuals who don't meet that criteria to be considered, an accredited investor, CPIN actually requires them to complete an education module, and it's titled How to Evaluate an Investment Opportunity.
Okay.
It's designed to give them the knowledge to understand the risks and the potential rewards that come with these types of investments.
Right.
And once they finish that module successfully, then they're designated as sophisticated investors within the network, and that allows them to actually participate in the investment opportunities.
Okay.
And going even further, CPIN offers ongoing educational resources to help all of the members, no matter what their experience level is,
Right.
to work towards their financial goals and, really make more informed decisions about their investments.
So they're aiming to educate and empower these individuals who, might not otherwise have had access to these types of investments, and they're helping them to grow their financial literacy as they go along.
That's the goal.
Now, in terms of the legality and how CPIN actually operates, they mention the Section 4A2 exemption. What is that?
Right. So CPIN operates under the Section 4A2 exemption of the Securities Act.
Okay.
Now, to put that in simpler terms, that's a provision that allows companies to offer securities privately
Okay.
without having to go through, that really rigorous and costly process of public registration with the SEC.
Right.
However, this exemption comes with certain conditions.
Okay.
Some of the most important ones in the context of CPIN are the need for those pre-existing relationships for membership. It can't just be open to the public, right?
Right.
And then they have a strict prohibition against any general solicitation or public advertising of the investment opportunities.
Okay.
So they can't just advertise these deals wisely.
Got it.
Access is limited to that network of members.
So the legal framework, it reinforces that invitation-only, community-based structure.
Absolutely.
Now let's talk about the benefits from the investor's perspective.
Right.
According to the source material, what are some of the key advantages to being a part of CPIN?
Well, they highlight several benefits. First and foremost, like we've been talking about, there's the exclusive access to these high-quality, carefully selected investment deals that are typically out of reach for the average person.
Right.
Secondly, they really emphasize informed decision-making, which is driven by that required education for sophisticated investors.
Yeah.
They also really highlight the transparency of how the network operates.
Okay.
So, the profit distribution,
Yeah.
the management of the SPVs, it's all very transparent.
Got it.
And then finally, they point to a really crucial alignment of interest between the general partner, the PIC, and the limited partners, the investors.
Right.
And this is because the PIC's compensation, it's mainly based on the profits that are generated by those SPVs.
Okay.
So their success is really tied directly to the financial success of the investors. And this model, this performance-based model, without any of those, upfront or ongoing management fees, it really creates this incentive to deliver those positive returns for the community.
So that alignment of interests is a significant advantage.
Definitely.
Now, who exactly is eligible to join CPIN? What are the criteria laid out in the source material?
Well, there are a few key requirements. First and foremost, as we've been saying all along, you have to be referred by an existing CPIN member who you already have an existing relationship with.
Okay.
So you can't just apply as an outsider.
Right.
And then secondly, prospective members, they need to really resonate with and support that core mission of, fostering self-sufficiency and economic empowerment for this broader community.
Yeah.
That commitment to these cooperative values, it seems to be a fundamental aspect of the network's identity. And then lastly, all applications, they're reviewed and they're approved by the parent investment club, the PIC,
Right.
just to make sure that those new members are a good fit
Yeah.
and that they align with the principles and those overall goals of the CPIN community.
So it's not just about having the money to invest. You really have to buy into those community values and that mission.
It's about the community.
Okay, so let's, sum all of this up. What are the key takeaways when we look at this closed private investment network?
Well, fundamentally, CPIN offers this really unique model for being able to access private investment opportunities.
Okay.
And it's built on this foundation of exclusivity, genuine cooperation among those members, and a commitment to that community benefit,
Right.
which is done through profit sharing and charitable giving. And by lowering the barrier to entry, in some cases down to just $100, they're allowing a wider range of people to participate in these deals that have historically been exclusive to the wealthy and well-connected.
So for you, the listener who's looking for that more efficient way to understand these potentially groundbreaking financial models, CPIN offers a very fascinating approach to investing and building wealth.
Yeah, it really moves beyond that traditional individualistic model.
Right.
It embeds that idea of community and a shared purpose directly into how it's structured.
This leads to, I think, a really important question for the listener to consider. What are the broader implications of a financial network that's built on trust and shared values and a commitment to both individual and collective economic empowerment?
Right. How could these community-driven models reshape how we think about creating wealth and social impact in the future?
Right.
It's a completely different lens to view personal finance through.
Absolutely. One that prioritizes that collaboration and that shared success.
Exactly.
And if you're interested in learning more about CPIN, the specifics of it, our source material actually provides contact information for the BNIC Network, LLC.
Yeah.
You can reach them through email at info@thebnic.com or by phone at 661-524-6674. This is for those listeners who are really intrigued and want to explore this unique approach to building wealth in community.
It's a fascinating concept.
Yeah, it really is.
And I think, as we move forward, it's definitely something to keep an eye on.